Well, what this graph tells you is that the mythical creature known as the marginal trader was betting on a 75 basis point rate hike. Now, most people thought it'd be 50 points, which is what happened, of course, but a few had some pennies on 75. They lost and sold the Aussie. It was well above 70 US cents this morning, and now it's trading at 69.6. Now, the RBA would prefer the dollar went up, not down, but that's life. The main reason for today's decision, of course, is to take the steam out of the economy, to lower inflation, which is already happening. Today's ABS data shows that lending to both owner-occupiers and investors fell in June in response to the fastest rate hikes in 28 years. Here's part of what the Governor, Philip Lowe, said today. The board places a high priority on the return of inflation to the 2 to 3% range over time, while keeping the economy on an even keel. The path to achieve this balance is a narrow one and clouded in uncertainty, not least because of global developments. And one of those global developments is in the Chinese economy. It's slowing sharply. Yesterday we learnt that manufacturing and services indexes both fell in July. And recently we learnt that the Chinese GDP actually contracted 2.6% in the June quarter. The Aussie share market was a bit lower before the interest rate decision was announced, but at 2:30, when the rate hike hit the screens, it bounced up and finished the day very slightly ahead, with gains by banks and retailers offset to some extent by falling miners. Asian markets were hit hard by the economic news out of China, and oil had quite a big fall on commodity markets. Iron ore and base metals also fell, while gold went up. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.